Levaster Education, investment in education pays the best interest.
Okay, so this video is for Cambridge O-level students. Now, one of the best ways to learn is through MCQs. It's a thing that many students study towards the last moment. Now, if you're a student who wants to learn a lot of content and who is a bit stuck with regard to which area you have to focus on the most, are you missing out anything? So I would recommend you to take a few hours of your time and focus on a few MCQ papers. This is not going to really help you. I mean, yes, it's going to help you to get your MCQ marks sorted out. But than that, if you learn exactly why certain things are wrong, why the right answer, how does it make sense, and etc. If you master that art, that's going to make you much better in terms of the content knowledge as well. So now, as an example, I'm going to try out this MCQ paper, which is a May-June 2020 variant level. And before, that is before 2020, the MCQ papers were you just had 30 MCQs. Now it's 35 MCQs. So now there's more MCQs. And in addition to that, you have 1 hour and 15 minutes. Now time is actually not a problem now. Since I'm doing MCQ paper, I'm just gonna do it under the exam times itself, in exam conditions, just to prove you that time is not a problem over here. But rather than that, our main key learning point here is to understand certain areas of accounting, certain areas of your syllabus in terms of MCQ. Now, let's start with the question number 1. Which statement is correct? Always, guys, the most important thing is reading. Now, I know it's very challenging for certain students to concentrate and pay attention to read every single detail. But however, that's what's going to differentiate you with another student. So, just take a moment and read every options. And there will be scenarios where you will figure out, okay, answer A is definitely correct. But I would advise you to look into the other options as well before coming to a conclusion. Number 1, which statement is correct? Accounting involves in measuring profits and losses. Accounting is recording of financial transactions. Bookkeeping involves communicating financial data. Bookkeeping requires the use of ratio analysis. Now students, first of all, accounting and bookkeeping is something that you would have learned in the first day of this syllabus. What is accounting? What is bookkeeping? So what is accounting? Just to give you the exact definition of it. Accounting is a procedure basically, right? It's a fundamental procedure that involves recording, analyzing, interpreting, and communicating financial information. Whereas bookkeeping is a part of accounting, just a small part. And that part involves in recording financial transactions. Now, when I read this question, accounting is the recording of financial transaction, that answer is completely wrong. Bookkeeping is the recording of financial transaction. But it's true. Bookkeeping is a part of accounting, but that doesn't mean it's just recording financial transactions. And then they are telling you, bookkeeping involves communicating financial data. No, accounting does that. Yeah, accounting is a process where you also do communicate financial data. And in accounting, you require ratio analysis, etc., etc. So the last two statements are completely wrong. Bookkeeping is just a small process. So the most obvious answer here is answer A. Accounting involves measuring profits and losses. And another important thing, see, just to repeat it once more, even though we are learning an MCQ paper, I will be teaching you all exactly how to master the MCQ paper. But in addition to that, rather than learning why one answer is correct, let's learn why the other three are wrong. That will make you improve your strategy and understanding with regard to the syllabus. And even in terms of writing answers or understanding your content, you will be much better and much mastered in certain areas. Question number 2. The balances remaining on the books of the business after preparation of the income statement included the following. And they are giving you a couple of information. What was the total of the liabilities? Now, what are liabilities, guys? Liabilities are obligations that a business has to settle. Something you have to pay basically. So now we'll read the first line. Loan from XY Finance. So obviously, the first thing itself is something that you will have to settle. Yeah. So let me just highlight the liabilities. Loan from XY Finance? Now, just to inform you, some questions are a bit tricky. They will say loan to XY Finance. So if you are giving a loan, that's an asset for the business. If you are taking a loan, that's a liability for the business. Wages due, in other words, accrued wages. You are liable to pay salaries. That's a liability. Prepaid wages, no, that's not a liability. You paid prepaid rent, sorry, it's an asset. You paid rent in advance, you don't have to pay it again. It's actually an asset for the business. So prepaid expenses are assets for business. Accrued expenses are liabilities of a business. Trade receivable asset, that's your customer. Trade payable is a liability. Motor vehicle asset. Provision for depreciation, let me explain that in a while. Now, based on the calculations, let me just make a few additions from that. 1000 plus 620 plus 4650 adds up to 15,270. Now, when it comes to provision for depreciation, that is not a liability for the business. Liability is obligations that a business has to pay. Depreciation is the fall in the value of a non-current asset over its useful life, and you minus it from your non-current asset. It's not a liability for a business, but it's the total fall in the value over a given period of time. So that's simple. That's a pretty much easy question. Third one. On 2nd April, Nina received a check from Zafar, a credit customer. These are common questions where you have to understand whose point of view you are looking at, because that could make a major differentiating factor in the question. First of all, they are asking what entity would Nina make. So we are going to look into Nina's point of view. Who is Nina? Nina could be a customer, supplier, could be anything. Nina received a check from Zafar, a customer. So, in my point of view, in Nina's point of view, Zafar is a customer. Yeah. In Nina's point of view, Zafar is a customer. And what are they mentioned? Check was returned by the bank. Now, certain wordings such as irrecoverable debts, provision for doubtful debts could be a bit misleading. What is irrecoverable debts? When the customer is incapable of paying the money. So that's completely irrecoverable. Now, is it a scenario like that over here? No, it's not. A check was returned by the bank. So if the bank is returning a check, it's more like a dishonored check. Maybe you ask the money again, they would pay. That doesn't give an indicator as to the fact that, no, you're not going to get this money. It doesn't say it's a bad debt, right? So the answer A and B are wrong. It's not a doubtful debt either. Maybe you will have a doubt in terms of this particular customer might pay you, might not pay you. But that doesn't matter over here. Here what matters is the exact transactions double entry. And this particular transaction is a dishonored check. So if it's a dishonored check, we will credit our bank because we didn't get money. We are just reversing the entries. We will credit our bank and debit Zafar account, which is our customer. The same entry we recorded while receiving the check, we are reversing that entry. So the appropriate answer is D. That's it. Very simple. Moving on to the next question. Anne is a trader. On 1st April, Cindy's account in Anne's ledger. So again, we have to look into whose point of view we are dealing this question with. So this which statement about the balance on Cindy's account in Anne's ledger is correct. So we are looking at Anne's point of view over here. Anne is a trader and Cindy's account in Anne's ledger showed a credit balance. Now guys, if an account has a credit balance, obviously that's not a customer, that's a supplier. If it's a customer, that's an asset with a debit balance. If it's a supplier, that will be a liability with a credit balance. So that gives me indication that this individual Cindy is a trade payable for the business. So there was a balance of 520 and the following transactions took place. And returned goods worth 30 for Cindy and bought goods 210 from Cindy and paid in cash. Now listen to me very carefully. You might have a customer, you might have a supplier. You might do credit purchase, credit sales, cash sales. No issues. But when you categorize a person as a trade receivable and trade payable, we only record credit transaction in the respective accounts. Now, what does the adjustment on 14th April mention? It mentions 210 from Cindy and paid in cash. So that's a cash transaction. That doesn't mean we have to include that individual in our supplier's account. Yes, true. It's a transaction with Cindy. But does that mean it was on credit? No, it's not. It's for cash. So for that particular reason, I will ignore that transaction. That is irrelevant for us. But according to our balance, now see, in my point of view, I have to pay this person 520. But I am returning goods worth 30. Do I have to pay for something that I return? I don't have to. So out of 510, if I am returning something of 30, I have to only pay 490. Common mistakes made by students are they look into this credit balance, what's the double entry, how to record it, draw T account. To be honest, certain questions you can just understand a much more simpler approach. You'll pay a person 520, you are returning 30. You don't have to pay to something that you return. So we just have to pay them 490. That's it. And OCD 490. That's it. Just because they give this additional transaction saying 210 paid in cash doesn't mean you have to involve it. If you take that into consideration, definitely your answer is wrong. Now, not only an MCQ question, this could be a question number 1 or 2 in your paper 2. So in that they would give a couple of balances, they would ask you to prepare a T account. In that T account, they will give you these adjustments. They might ask you to prepare Cindy's T account. And they are giving you transactions such as and bought from Cindy for cash. Do you have to record them? No. If you do, it's completely wrong. And more than it being wrong, you have to understand, you are giving I'm talking about paper 2. Paper 1, actually the examiner can't really judge you based on how you got your answer. But paper 2, let's say you are recording a transaction such as cash transaction in a trade payable account. Your examiner could judge you as a student who does not understand the concept, the basic concept which differentiates between cash and credit. That would be a bad image because you have to show off to your examiner that you know your right answers, not do the worst possible answers and give a very bad remark. Right? Next one, 5th question. Goods bought on credit by T from 10. Let me just make the names more simpler. Credit by 2 from 10. Are returned before they are paid for. TUM keeps a full double entry system. Where will TUM record the return of goods? Cash book, now I don't see any cash transaction that happened over here. So the answer is not A. General journal only. Now, yeah, I mean, definitely general journal is effective. Not that it's not. Definitely general journal is effective. However, general ledger is effective. But however, in addition to the general ledger, who are you dealing with? You are buying goods from a supplier. You are dealing with a supplier. In other words, a trade payable. Trade payables are recorded in purchase ledger. So both these ledgers would get affected for this one transaction. So the answer is C. 6th one. Dave supplies goods to Peter on credit. Peter owed Dave for 40. Dave sent or received the following documents. So somehow there is an individual who owes $440. And then there was an invoice of $360. There was an invoice of $360 that will increase the payables. And then there was a payment of $429 after deducting $11 discount. Now many students will ignore the $11. But please remember, when it comes to cash discount is definitely recorded in financial statements. Trade discount, yes, that's not recorded. However, cash discounts, yes, we do consider that. So, I will also be subtracting that. Finally, debit note and credit note. Let me just give you a small explanation towards how this works, right? Let's just assume you're the customer and the supplier, right? You're the customer and the supplier. You bought this pencil from me and you're not happy with it. So if you're not happy with it, what are you going to do? You're going to return it. You're going to come back to me and be like, I don't want this pencil, it's not working, I want to return it. And you're returning this pencil back to me. Now, let's just assume rather than this being just a customer and supplier, these are two organizations, two reputed businesses where the dealings that happen are documented, every single dealings. So if you are to returning products to me, you will definitely, along with the goods that you return, you will send a document. So the document that you will send, the customer, for your point of view, it's a purchase return. So you will send me a debit note. So when you send me a debit note, you will issue a debit note, I will receive a debit note. After I acknowledge the scenario to see what's wrong with this product, to see what your comments are, I will get back to you with a response and I will provide you a credit note. So the seller, for me it's a sale. It's a sales return. So I will give a credit note. I will issue a credit note, you will receive a credit note. Now look at the documents that's moving along, right? You gave a debit note, I gave a credit note. But it's for the same transaction, right? Exactly. These are small things students miss out. Now if you see over here, they are mentioning debit note, credit note on two different dates. Maybe it takes time to get this procedure sorted. But it's the same transaction. And a return would reduce your payable, true. But if you minus it twice, that's wrong. Because that's a wrong estimation you are thinking, assuming you are doing returns twice. That's completely wrong. So we just reduce $50. So now let's get the answer. 440 plus 360 minus 429 minus 11 minus 50, that will give you 310. And the answer is B. The answer is B. Number 7. What is recorded in the sales journal? Very simple. Credit sales of inventory. Okay. So do we have an answer like that? All money received from sales? No. Any money received from sales will go to the cash. All sales transactions? No. Because sales is broken down into two, cash sales and credit sales. Cash sales transactions, definitely no. Answer is B. But again, I would say it's a bit misleading because you could have a credit sale of non-current asset. If you have a credit sale of non-current asset, that will go to the general journal. Only credit sale of inventory goes to the sales journal. But according to the options they have given us, this seems to be fine. Yeah. Now, 8th question. Which statement about the 2-column cash book is correct? Now, there are students who go to the exam without looking into the most basic areas. Now, personally for our students, we provide study text. We provide study text, a comprehensive study text, which comprises the whole syllabus. Why is that provided for the students? Now, even I personally mentioned them saying, see, these documents will definitely help you out, even the basic areas and the challenging areas. It's a bit complex. The textbook has to be a bit complex with wordings that are a little bit challenging. It covers basic areas as well, like cash book and etc. Now, certain students ask me, why are we learning this? Is it really necessary? Definitely yes. Now, an MCQ question, simple as this. You might go wrong. You might feel like, okay, I'm just losing a mark or two. There are people who have failed in 1 mark. There are people who have lost A stars in 1 mark. So we don't have to take the risk, right? 1 mark matters. That's it. So even if it's the basic thing or even if it's the most advanced thing, we have to master both of it. Only then we will be perfect for the examination. Many mistakes made by smart students, the ultra smart students, is that they will not focus on the basic areas. Now this is one of the basic things. It could even be tested in your paper too, not as a theory question, maybe, but as a cash book. You might get a cash book question, you might get a petty cash book question. you could always expect for basic questions as well. So if you are a student who is studying in the last moment, I would say also give importance for the basic stuff, because that could be a small mistake you make. If you assume, okay, that's easy, I can handle it, you might get into a major problem. Which statement about two-column cash book is correct? It's a ledger account for bank transactions only? No. It's a ledger account for cash transactions only? No. It's a book of prime entry? Yes. That's the most appropriate answer. Now, yes, it does records cash and bank transactions, and it also records three-column cash book records discount. This is two-column cash book. Two-column cash book, you have cash and bank. Triple column cash book, you have discounts as well. So here the appropriate answer is C. Ninth one. Which statement about trade discount are correct? It is debited to the supplier's account? Definitely no. If I'm not mistaken, a couple of MCQs back, I just explained you saying trade discount not record. Yeah, trade discount is not record. If you want to know why, let me just give an explanation. See, when you get a trade discount, when a customer buys in bulk, so when you buy in bulk, when you get the receipt, when you get your invoice, receipt, or whatever the document at that particular time, depending on how you make the purchase, the document's net amount will be after the discount. So you will get the amount after discount. Now what will the bookkeeper do? When he records financial transactions, they will take the final amount, not the amount before discounts. They will take the final amount. So in that scenario, you're excluding discounts immediately. So that's a valid explanation as to why we don't take trade discounts. Cash discount, of course, is pretty obvious. You are buying at a price. When you are paying early settlement, if you want to pay early, you might receive a discount. So when you are receiving a discount, obviously we have to keep account of it, because you have sold or purchased at a given price. So if you are making a return, there should be a double entry to sync and make sure everything is equal. It is only given if the invoice is paid within a period of time. That's cash discount, not trade discount. It is allowed as a deduction from the price of goods on an invoice. That's exactly what I explained a while back, so that's correct. Okay, there are two answers. It is used to encourage bulk buying. That's again something that I just mentioned. So answer 3 and 4, do we have option? Yes, we do. Answer is D. 10th one. Why is a trial balance prepared? To analyze financial information? No. That is not why trial balance is prepared. The right reason for why a trial balance is prepared is to measure arithmetic accuracy in bookkeeping, and it will also assist preparation of financial statements. Financial statements are used to analyze the financial information. Next one, they are mentioning to assist preparation. Yes, that's exactly what I mentioned. The appropriate answer is B. The appropriate answer is B. 11th one. The income statement of a business showed a loss of 16,000. On checking the books, the following errors were discovered. No adjustment had been made for insurance prepaid. Now, I want you all to be very logical and think very carefully. When you get questions such as this, there are three types of students. Type number 1, they might not even record the answer, or just put something random. Type number 2, they will overthink and they will definitely get the wrong ones. Type number 3 is the ones who would genuinely understand and get the right answer. So always be type number 3. Try to be the student who knows what you're doing. There is no point in just trying out something and not getting the right answer, right? If you're putting some time, putting some effort, you might as well know what you're doing and get the right answer. So you're having a loss right now. Okay? You haven't made adjustments for prepaid. What do you do for prepaid? Accruals you add, prepayments you minus. We know that, right? Accruals we add, prepayments we minus. Now in addition to that, when you minus your prepayments, please pay attention to this, yeah? When you minus your prepayments, your expenses will reduce. If your expenses reduce, your profit will increase. Now you're not making a profit, no, you're making a loss. So your loss is going to reduce because this is a favorable thing. So we will minus this from your loss. Or if you want to make it much more better, you are having a minus 16,000 and we are reducing our expenses, that's increasing our profit. Or in other words, reducing our loss. No entry had been made for bank charges. Now, when it comes to bank charges, that's an expense. If we are to record that expense, obviously it's going to affect our profit. In this scenario, loss. So our right answer would be minus 16,000 plus 480 minus 620. It's going to give 16,140. Do we have an answer like that? Yes, we do. Answer is C. Now, moving on to the next question. Question number 12. Peter's bank statement showed a debit balance of 600. Now listen to me very carefully. The point of views of you and your bank are totally different. So if it's a debit balance in the bank statement, that means it's a credit balance for you. It's the opposite. The bank's point of view is opposite as of to the general business's point of view. Now when it comes to debit balance, this indicates that we have a bank overdraft of 600. That's the indication I can get. I have a bank overdraft of 600. And they are giving the following transactions. What was the bank statement balance on 30th April? Fine. So I have a bank overdraft that is minus 600. I'm getting a few deposits, that's 7,400. I'm making a few check payments, that is 6,200. Direct debit payment for insurance, that's a payment, that's 180. And there's a credit transfer from customer, so that's an income for the business. So from this, let's do the math and let's calculate what the closing balance is. 600 minus 600 plus 7,400 minus 6,200 minus 180 plus 450 would give you 870. So I'm getting a positive 870. So what does a positive 870 mean? That means in my point of view it's a debit balance. But in the bank statement's point of view it's a credit balance. So the answer is A. The answer is A. Question number 13. A sales ledger control account had a debit balance of $10,000. It was found that 2,000 contra entry to the purchase ledger had been entered in the wrong side of the sales ledger. So now you might wonder, what does contra entry with the purchase ledger mean? Let's say you are a customer and I am the supplier. So I am selling goods to you. In addition to that, I also buy goods from you. So you are not only my customer, you are also my supplier. So it's when a customer and the supplier are the same person. So we are having constant transactions within one another. So if we are having transactions within us itself, there might be payments that I have to make to you and you have to make to me. So what's better? We'll just cancel things off within us. So that's called contra entry. So now it's something that will reduce the customer's balance. No? So think practically and see. Yeah, I am supposed to record this contra entry in the credit side of my customer's account. I am supposed to reduce my customer's account. But what are they mentioning? They are saying I have done the opposite. That means I have recorded it in the debit side. Now for me to correct it, if I just record in the credit side, or in other words, if I just reduce 2,000, that's not going to help. That's just a single entry. That will just cancel out the error. I have to record it twice. I have to credit it twice. In other words, I have to reduce it twice. Only then it will be perfect. Then what would be the closing balance? It would be $6,000. Do we have an answer for that? Yes, we do. Answer is 13A. 14th one. What is the total capital expenditure of the business? Building cost, yes, that's a capital expenditure. Legal fees, yes.
air conditioning system for original workshop, guys. If you are buying an air conditioning system, guys, obviously that's a capital expenditure. For a new workshop or old workshop or whatever, you're just buying a new thing, right? It's a capital expenditure. But if you're decorating your original workshop, that is just something that you're doing again and again. It's a recurring expense. But if you're decorating your new workshop for the first time, that's a capital expenditure. So I have to add everything that is highlighted. 65,000 plus 1,800 plus 2,300 plus 1,100 plus 800 would give me a grand total of 71,000, which is C. The answer is C. 14 MCQs done. 15th MCQ. Now, I just will take a little bit more faster pace to explain, because now we have got the hang of doing the MCQs from 0 to 14 MCQs, right? Now I'll just increase the pace of learning, okay? And since it's a recorded lecture, you all always have the benefit of rewinding and revisiting and watching it. So I will just go in a bit of a faster pace so that you will understand at an exam condition, if an individual is sitting there and at that level of pressure, he would obviously continue and finishes off in a faster pace. Now I am discussing it to you and I am trying to finish it off within the given level of time with discussion. So that's something that you will understand. See, I am discussing everything, telling why the others are wrong and giving you the right answer and giving explanation and finishing it off within the given level of time. So you have to understand, if you are sitting in the exam hall with no one to talk to by just focusing and getting the answers, definitely it's not a challenge. If I can do it with discussion within the time, you can definitely do it. So time is not a concern over here at all. 15th MCQ. A non-current asset was depreciated at the end of the first year of ownership using straight line method. What's the equation for straight line method? You actually have two equations. Cost into depreciation percentage, cost minus scrap value, or in other words residual value, divided by useful life. So you might wonder, why are there two equations? Depending on what the question provides us, we have to use a different equation. Now according to this question, cost is given, residual value is given, useful life is given. So the appropriate equation we have to use is straight line method. So 16,000 divided by 4 would give you 4,000. It was later found that the reducing balance method 30% should have been used. Now what's the equation for reducing balance method? Net book value into depreciation percentage. Now focus on one thing. It's a new asset. First year of ownership. So at the starting pace, when you're having a new asset for the first time, the cost is the same as the net book value. It's a brand new asset, guys, yeah? So the net book value and the cost would be the same. So cost would be 20,000, net book value also would be 20,000 into the depreciation percentage, which is 30%. And you will get an answer, 6,000. So we are supposed to record 6,000, we recorded 4,000. So we have to increase our expenses by 2,000. This will reduce our profit by 2,000. If you increase your expenses, you're going to reduce your profit. Simple as that. Adjustment number 16. Question number 16. The company's financial year ends on 31st December 2019. On 1st December, that's the first day of the last month, it paid rent of 8,000 for 4 months ended. 8,000 for 4 months means 2,000 per month. Agreed, no? 2,000 per month. Now the month of December is okay. You're paying for the month of December. It falls within the year. No problem at all. But you're paying for the rest 3 months, right? December, January, February, March. So you're paying for 3 extra months. So that's a prepaid expense. You're paying 2,000 per month for 3 extra months. So basically you're paying 6,000 more. And what is it for the business? As I explained you towards the starting MCQs, it's a prepaid expense. Prepaid expense is an asset for the business. assets have debit balance. So 6,000 debit. See, this is how you have to understand very well with regard to how to deal with the question. Last year you paid 3 months extra. This year what's the opening balance? 3 months extra, 2,000 per month will give you 6,000. It's asset for you. It's a prepaid expense. Therefore, it's a debit balance. So just to explain you, now as we discussed with regard to accruals and prepayments and etc., there are textbooks that we give to our students, So these textbooks, what I'm showing you right now is an Excel textbook, yeah. But it covers out every single area that's needed. We also have a Cambridge textbook. I do not have access to it at the moment to show you, yeah. So in this, we cover out exactly about accruals and prepayments, bad debt, doubtful debt, depreciation, disposal, etc., etc. Just to show you the bad debts, accruals and prepayments portion, yeah. How prepaid expense is asset, therefore debit balance, accrued expense liability with a credit balance, and likewise, right? Now, next question. We'll connect our textbook content to this and give you the answer. So please remember now, we provide the maximum for our students with regard to the contents, short notes, mind maps, this, that, and etc. So that's the differentiating factor for the students, so they can make their lives easy as well. Just to show you an example of mind maps, forgive me, I don't have enough of content at the moment in this device. Let me just show you an A-level mind map. Yeah. So there are similar mind maps such as these for the O-level students, which consist of the things that's exactly needed, which makes a differentiating point between them and another student. Now, getting back to the question number 17. Commission receivable, it's an income. Debit balance, credit balance. Now, incomes accrued is an asset, and assets have debit balance. So this debit balance represents the income accrued, or in other words, income outstanding, whereas income prepaid is a liability, and liabilities have credit balance. Therefore, that represents income prepaid. So the appropriate answer is B. Next one, 18th MCQ. So we are heading close to the 35th MCQ. It's not that far anymore. Joseph sells goods on credit and maintains a provision for doubtful debt. He wants to increase his provision by 250. So if it's an increase in provision, that's an expense for the business. And expenses are debited to the income statement. In addition to that, where else do we record this? Not the customer's account. Customer's account only gets affected during bad debts. Doubtful debts, we don't mix the customer's account. Don't get that mistaken, right? So doubtful debt, we record it separately in a doubtful debt account. So we credit the provision for doubtful debt. Provision for doubtful debt and provision for depreciation works in a similar manner, increases credit. So that's it. Increase in doubtful debt will be debited to the income statement and credited to the doubtful debt account. 19th question. Which items are deducted from gross profit when calculating the profit for the year? Balance on the provision for doubtful debt account? Nope. Please remember, provision for doubtful debt account is only getting affected due to increases and decreases. Income statement gets affected only when the doubtful debt increases or decreases. If it increases, it's an expense. If it decreases, it's an income. Closing balance, there is no effect. Carriage made on goods supplied to customers, yes, that's an expense. But what if they say carriage paid on goods supplied to suppliers? Guys, if you buy from suppliers and you pay delivery cost, that's called carriage inwards. Carriage inwards is recorded in cost of sales. Here we are dealing with transactions and they are asking us that is deducted from gross profit. Different scenario. So you have to be smart enough to understand the difference. Drawings made by owner during the year, that wouldn't affect. Anyways, cash drawings is not recorded in income statement. Stock drawings, yes, recorded. Now you might ask me, sir, how do you know it's a stock drawing? See, even if it's a stock drawing, let it be a stock drawing, no issues. Think practically and see. Where do you record stock drawings? You record it under cost of sales. Here we are dealing with transaction that is deducted from gross profit. Either way, it won't make effect. So 3 is out. 4. Wages paid. Yes, obviously, it will affect. Next one. 20th question. On 31st December 2019, John had net assets of 2000, capital of 2000. One of the easiest question. But students will, overthink and definitely screw it up. Now, what is net assets? Assets minus liability. In other words, capital. So they are just telling you capital is 2000 in 2 different ways. That's it. And what are they saying? Goods bought for 140 were sold for 220. Guys, think very practically. Don't overthink. Think in a simple aspect, Some people will go and prepare T accounts, record this, record that, do so much of various calculations. Be very practical. You bought something for 140, sold for 220. Okay, you made a profit. Profit of how much? 80. You made a profit of 80. No issues. Now, if you made a profit of 80, how is it going to affect your capital? It will increase your capital, no? Yes. So the answer is B. It will increase your capital. And it will increase your net assets. Why? Net asset is also capital, no guys? Simple as that. Don't overthink. Easy questions. Certain questions are ultra easy. 21st MCQ. At the end of the financial year, Raminder made an adjustment for rent owed by tenant. So it's not a rent expense, it's a rent income here. Yeah. How did this affect Raminder's financial statements? Now, if you are getting a accrued income is an asset for the business. Yeah. Accrued income is an asset for the business. Assets will increase. At the same time, accruals you add, prepayments you minus. You know that, no? If I am adding these accruals, I am going to increase my income further. If I increase my income further, my profit is also going to increase. Overall answer, both will increase. Answer is D. 22nd MCQ. The owner of the business took goods for his own use, but forgot to make an entry in the accounts. What was the effect of this error? Now please remember one thing. They will give things to confuse you. Okay. Where do you record stock drawings? I think just a while back I explained you are subtracting it from your cost of sales. So if you subtract something from cost of sales, that subtraction will reduce cost of sales and increase profit. So if I make the right adjustment, my profit will increase. But what did I do? I didn't do that. So my profit is going to be understated. Answer is either C or D. Will it affect my capital employed? Actually, no. The drawings and the profit will actually cancel out each other. So it will not really have an overall effect on the profitability. Because your profit is also understated and your capital is overstated because you're not recording the drawings. It will cancel off. There is error of compensation there. No effect on capital employed. Little bit of extra thinking only, but you have to be smart enough to figure that out. Yeah. 23rd one. Rajit and Sunil formed a partnership but did not prepare a partnership agreement. Just to give you a small insight, if there is no agreement, business has to share profits and losses equally, invest equally. No interest on capital, no interest on drawings, no salaries. If a partner gives a loan, 5% interest. There is so much of requirements such as that. Now, R has 40,000, Sunil has invested 20,000. Drawings, R has taken more money, share of work is equal. What is the most beneficial point for R? Now, if they put drawings and interest on drawings, guys, it's going to affect R only. Why? This fellow is only taking more money from the business. Interest on drawings and limit on drawings will affect R only the most. Salaries won't really make an effect. Why? They are literally having the same share of work. So salary would not really make a difference. But interest on capital, yes. R is the person who invested twice as much as Sunil. So obviously, R should get a higher return. So interest on capital would make a differentiating factor and would benefit R in terms of this scenario. 24th adjustment. 24th question. Harry and Jane are in a partnership. The following information is available. They are giving you a few data. Let me just draw a T account. Current account generally has a credit balance and they are mentioning it. There could be a debit balance, not that it's not, there could be. Now, it's just a small childish thing that I taught my students to remember. Now, normally current account increases credit, decreases debit. Some of them, find it hard to keep things in mind, right? So just to make a more easier way to remember, I have told students to, put happy face and sad face. I know it's a bit childish, but it could help. Salaries will make the partner happy, obviously. Drawings, it will make the partner sad. Why? Because you have to pay it back later. Share of profit, obviously partner will be over the moon, guys. Why? That's a return that the partner is waiting for. He's literally waiting for the profit, guys. It's going to make the partner happy. Now you do the additions and subtractions. Your answer will be 38,000. Isn't that a much more easier way? I know it's childish. If you want, you can adopt it. Happy face, sad face, or else, no need. You can leave it. You can follow whatever approach that is easier for you. Just a few options to try out. 25th question. Which item is shown in the income statement of a company and the statement of and the statement of change in equity? Debenture interest, nope. That is not recorded in the statement of change in equity. That's a non-current liability. Ordinary share dividend paid, nope. That's not recorded in the income statement. Yeah, it's not a trading activity. Profit, yes, profit is recorded both in the income statement and in the statement of change in equity. Transfer to general reserve, nope, that is not recorded as well. See, that is recorded in the statement of change in equity. I hope you all remember, this is covered in the chapter company accounts, where you transfer from your retained earnings to general reserve. You have share capital, retained earnings, general reserve. It's company accounts. It's a, to be honest, easy chapter. A-level, it gets a bit more complicated. Very interesting, but complicated. There are other reserves as well, in addition to these three. 26th question, kind of easy question. Now, you can learn this through trial by error. Now, they are saying the capital decreased by 200 even though he made a profit. Which transaction happened? So, let me just take the fourth one. 7,000, you made a profit of 7,000. You introduced capital 2,200 and you took out drawings 4,600. What's the change in your capital? Trial by error means you're just trying a couple of options to see until you get the right answer. So here I get an answer of 4,600. Is my capital changing by 4,600? No. They say 200 decrease. Then what do? Try again. Profit 7,000, introducing capital 1,000, drawings 8,200. Do the math, you will get minus 200. Profit is reducing by 200. Answer is A. See, you can always choose the way you want to get your answer. Trial by error, whatever the way you want, as long as you don't just put a random answer, you're good to go. Yeah, I mean, yeah, true. Luck could be on your side, guys, where you might just put a random answer, get the right thing, but how sure, how certain are you that that's going to be perfect? And yet again, as I told you, our aim here is to learn accounting areas, concepts, which will help us for not only paper 1, but also paper 2. So we are just learning things that will increase our knowledge and capacity in the accounting areas. 27th question. So we are heading close to the 30th question. Ahmed provided the following information. Trade receivable balance, information is given. By how much had the trade receivable increased? Okay. Opening balance 15,000. Credit sales 85,000, that will increase the customer's balance. Cash sales, nope, no effect. Just because they give, don't take, guys. Just because they give, don't take. Checks received from customers, that will reduce the balance, guys. If the customers are paying, that will cut off the amount. Bad debts, that also will reduce the balance, guys. That will also reduce the balance. So what are we left out with? 15,000 plus 85,000 minus 65,000 minus 2,000. We are left out with 33,000. Now, what is the opening balance? 15,000. What is our closing balance? 33,000. That means we had a fall, increase, sorry. There is an increase of 18,000 worth of trade receivables. So if you are more familiar with the T account, if you are a student who prefers the T account, you could always draw the T account and get the answer, or you can just, choose this approach as well, the increase-decrease approach. 28th adjustment, 28th question. Revenue is given, markup is given, opening closing inventory is given, and they are asking for purchases. Before I find purchases, I think the good approach here is to find the cost of sales. To find the cost of sales, I can use markup. So, whenever they give markup margin, follow the equation cost plus profit equals selling price. Markup is on cost. Markup means cost is 100%. How many percent markup? 50% markup. This will mean your selling price is 150%. Now, what's your revenue? 90,000. Your revenue is equivalent to 150%. So if your revenue is equal to 150%, if you do this division, you will get 1%. I want my cost. I want to know what's the cost of sales. So revenue divided by 150% into 100% will give you 60,000, and this 60,000 is my cost of sales. Now, what are the components of cost of sales? Opening inventory, we have it 8,000. Purchases, that's what we are finding. Closing inventory, we have it 2,000. Stock drawings, we have it 7,000. We know the ultimate answer is 60,000. Now we can work backwards. Working backwards means whatever you are supposed to add, you minus, and vice versa. So let me add 7,000, subtract 8,000, add 2,000, I will get 61,000 as an answer. Do we have an option for 61,000? Yes, we do. The answer is D. 29th MCQ. What is the trade payable turnover? What's the equation for trade payable turnover? Trade payable turnover is equal to trade payable divided by credit purchases into 365. What does trade payable mean? On average, how long it takes for our suppliers to pay us money. That's it. Now, what's our trade payable balance at the end of the year? 9765. What's our credit purchases? 115,000 into 365. All the other data is irrelevant. So we can do the calculation. 9765 divided by 115,000 into 365. We will get 30.99. So that is 31 days. We round up for the next day. 31 days. Answer for the 29th MCQ is D. That brings us to the final 5 MCQs. So here we are, the last 5 MCQs. Now, just please remember one thing. Based on whatever you learned till now, you would have got a certain understanding, not only how important paper 1 learning is, but also you would have learned so many other chapters. Bad debts, doubtful debts, accruals and prepayments, depreciation, disposal, company accounts, basics of accounting, cash book. you can name it, right? There's a couple of chapters that you have learned. So this is an approach that even a smart student or a student who is a little bit weak could take to understand the majority concepts of accounting, to learn here and there. Just keep it as a weekly practice maybe. And we also would upload a couple of videos from time to time, which will always assist the students. In addition to the videos, we obviously have our main full-time lectures that's going on, revision sessions, special seminars, specialized documents, mind maps, tutorials, every single thing that will help the student is provided. All you have to do is just contact us and get in touch with to get all these informations and benefit. If you're a student doing the exam in October, November, which is in a couple of months, I think less than one or 2 months from the time this video is recorded, or if you're a student doing the exam next year, 2024, 25, doesn't really matter. Whatever the content you learn here will always help you out. Because the learning from this particular area, whatever the component, the syllabus content or whatnot, will definitely be tested in whatever the year you do the exam. Because I'm just explaining the whole syllabus, right, at the end of the day. 30th MCQ. On 1st January, current assets totaled to 16,000 and the current ratio was 2:1. So current ratio is 2:1. That means current assets divided by current liability, right? And your current asset is 16,000. So what does this indicate? This indicates your current liability is half your current assets. That means it's 8,000. Then they are saying current liability increased by 50%. So 50% of 8,000 is 4,000. So 8,000 plus 4,000, your new current liability will be 12,000. And your new current ratio is 1.5. So what will be your answer? 12,000 into 1.5 will give you $18,000. So your current assets as of now is 18,000. Your answer is B. How did I get the answer? I calculated the current liability previously using the current ratio. I used the same information, increased the current liability and calculated again. And based on that information, I recalculated my current asset and I got my answer. 31st MCQ. Company provided the following information for his liquid asset, acid test. And you can see it's been increasing. Year 1, 2, 3. Your current ratio is increasing by a small amount. That means your current assets are increasing. But please pay attention to one thing. Liquid ratio considers all current assets except for closing inventory. It considers all current assets except for closing inventory. Now, which would explain the change in ratio? Number 1. Inventory. No. Inventory is not at all considered. I just now told you, right? It considers everything except for inventory. Other payable decreasing. Guys, see, if your current ratio is increasing, it's either your asset is increasing or liability is falling. So yes, I think the answer is B. What about C and D? Trade payable increasing. Nope. Trade payable is supposed to fall. Trade receivable decreasing. No. Trade receivable is supposed to increase. So I am just explaining you. This scenario is resulted either due to increase in current asset excluding inventory or fall in current liability. That's it. That's it. 32nd MCQ. Which use of accounting statements is interested in past performance when taking actions for necessary future? Not government, they just care about the tax. Investors care about the future. Yeah, kind of true. But decision making and etc. is mainly onto the manager. So the appropriate answer in this scenario is managers. 33rd MCQ. Rashid's financial year ends on 31st December. He paid rent on February 1st, May 1st, etc. etc. And they made adjustments for rent prepaid. What's the accounting principle applied? Guys, please remember, accruals, prepayments and all this stuff is matching concept. You match your incomes with expenses. Another name for matching concept is accruals concept. So these concepts play a major role in your examination. You have to understand exactly how it affects, how it's needed, this, that, etc. That's going to play a major role as well. Which statement describes the going concern principle? What is going concern? The business will function for a foreseeable future, for a predefined period of time. Okay. Now, accounting methods used consistently, no, that's consistency concept. That's consistency concept. Revenue is earned when it's incurred, that is that's actually a realization concept, to realize your income when it's actually earned. Business is separate from its owner, that is business entity concept. Owner and the business are two people. B is the appropriate answer. It assumes that the business will continue for a foreseeable future, forever. That's the assumption we make in going concern. That brings us to the last MCQ. Brad purchased machine for 1,000. Machine was expected to last for 4 years with no residual value. Same year machine costed 1,002. So in the market the machine's price increased. Whether it increases, decreases, changes, doesn't matter guys, doesn't matter at all. According to historical cost concept, we always record the original purchase price only. We don't consider the current market price, that is not considered. A and B is completely wrong. Whether the assets value increases, reduces, at the moment we only consider purchase price. Now okay, asset value increased, no, not fell down. So do I not consider depreciation? No. Depreciation is to be considered. 1 year's depreciation. According to the matching concept, you have to match your expense with the income. So that brings us to the end of this paper. Now, definitely, I haven't exceeded the time limit. Yeah. So you have 1 hour and 15 minutes. With explanation and etc., assuming there is no explanation, there is just a fast pace of getting the answer, definitely cut down the time even more. So this will give you a better idea, saying time is not a problem in terms of attempting MCQs. Now let's leave that MCQ thing aside. Paper 2 content. Learning contents and components from this, you might learn 30 MCQs, but you're actually learning even more than that. Why? Because rather than learning why 1 is correct, you are learning why 3 are wrong. In addition to that, you are also learning different concepts, different areas, depreciation, you are jumping to disposal, you are learning accruals, you are learning bad debts. Students will be learning different chapters in just one paper. That will help your mind be familiarized with every single area of accounts. And this sort of a learning is extremely recommended for a student. That's why we have paper 1 as a recorded session to help students look into every single areas. And we are there to assist you with this end. Paper 2, we have our special revision classes which you all can join and get the understanding of your paper 2 contents. If you all need the textbooks, revision kits, revision guides, you could contact us anytime. In addition to that, we will also be posting further videos with regard to MCQs which will assist the student to the next level. That's it for this video and we can conclude.